Are you considering using an FHA loan to buy a home? If so, it's imperative that you know FHA loans have risk associated with them, especially in a shifting housing market. So in today's video, I want to talk about those risks, help you navigate them, know what to expect, so you know exactly what you're getting into if you're considering using an FHA loan. Now, if you've been watching my channel in the past or seen any of my videos, I'm a huge proponent of using FHA. I think FHA loans are great loans. They allow a minimum down payment, just 3.5%. They also allow super low credit scores as low as 500. And they also allow higher debt to income ratio. So they allow you to use more of your income towards your mortgage than any other loan program out there, which is a huge benefit because you can generally qualify for more home. But at the same time, there are some risks and you need to understand those risks as we head into a changing housing market. Now, regardless of whether you're a first-time home buyer or a buyer that's purchased several homes, you can use an FHA loan. They are not just for first-time home buyers. In fact, you can use it as many times as you want. But as we head into this changing market where there's more inventory, there's a little bit less buyer demand than the last couple of years, I think it's important to point out some of the risk that are associated with FHA loans because I often have viewers reaching out on my channel saying things that concern me. They concern me because I think there's a misconception that you can just buy a property and over time it's always going to appreciate, because that's what we've seen over the last couple of years. We've seen rapid home appreciation over the last few years, and there's a lot of home buyers out there that have FOMO. There's a lot of home buyers out there sitting on the sidelines that have been priced out of the market, and they're looking for that opportunity to get in because they heard that their friend made 35 to 40% appreciation in such a short period of time, and they want a piece of that. At the same time, there's videos all over YouTube talking about house hacking, how you can buy a house, turn it into an investment property and buy another one, or buy a house and do the BRRRR strategy where you buy it, you rehab it, you rent it out, and you redo that and do another. And yeah, you can do those things, but again, there are risks associated with it. So let's take a minute here and talk about FHA risk in this market and what you have to know if you're considering buying a home and using an FHA loan. Now, as I mentioned earlier in the video, one of the huge benefits of using FHA is that you only have to put 3.5% down. So if you're buying a $100,000 home, that's only $3,500. A $200,000 home is $7,000. A $300,000 home is $10,500, and you can do the math from there. So not a huge down payment, not the 20% that your parents put down or that you've read about online that you need to purchase a home. But because of that minimum down payment, it puts you in a risky situation. Why, you're asking? Well, because over the last couple of years, we saw that 25, 35, 40% appreciation in many markets out there, right? Just a short period of time. And if you go back historically and look at housing appreciation over the last 50 to 60 years, the average in any given year is about 4.6%. And since we've seen such rapid appreciation in such a short period of time, there's a very good chance that we're going to see home prices move sideways, maybe even down in some markets for an extended period of time so that we can get back to that long-term trend of 4.6% in appreciation. And that's where the risk comes in. If you're buying a home at the moment and you're using FHA and you only put 3.5% down, you have very little equity going into that property because FHA has an upfront funding fee when you purchase that mortgage. So although you're putting 3.5% down, some of that down payment is getting eaten up by the mortgage insurance premium that you have upfront on that loan. So you actually only have around 1.75% in equity in that property. And if we move into a market, like I mentioned a moment ago, where home prices just move sideways over the next couple of years, maybe even for the next 5 to 10 years, that means you're gaining nothing in appreciation. While you're paying down the principal on that mortgage by making your mortgage payment every month, if you go and try to sell that property in a 2 to 3 year window, which many home buyers out there, that's their expectations at the moment. And in my opinion, that's the wrong way to look at the current market because of that home price growth that we've seen. But let's just say you do move sideways over the next couple of years and you need to sell that property. You're going through a divorce, job relocation, maybe you just bought it and thought you were going to be in it for a couple of years and you want to sell it. Well, if home prices move sideways, you're going to have very little equity in that property. And there are costs involved when selling a home. Typically in most markets, you're going to pay somewhere between 5 and 6% of the purchase price to sell a home, between realtor commissions, between attorney fees, escrow fees, all the stuff that's involved in the selling of that property. It's going to cost you around 5 to 6%. So if you go in and you put very little down and you have a short-term time horizon with owning that property, you could be in a position where you're upside down. And that's a huge risk because you're probably buying that home and using an FHA loan because you have a minimal down payment. And there's absolutely nothing wrong with that. But you do need to understand that if you have to sell that property in a short period of time, that you could be putting yourself in a position where you either have to come up with money out of your pocket to sell it, or in some cases, maybe even short sell that property, where you have to go to your bank and tell them, hey, listen, I owe more on the property than it's worth. I need you to allow me to sell it for less than I owe you. And if the bank agrees, then they allow you to do that, but it ends up affecting your credit in a negative way, which could hinder you purchasing property in the future. Now let's use the same example and say that home prices decline 5%. In your market. In that case, you're going to end up in a more dire situation because now you may end up owing even more on that property than it's worth. So again, this isn't a video to steer you away from FHA because again, FHA loans are great loans. They have their benefits. In fact, I had a client that purchased a home last year using an FHA loan and was able to refinance into a conventional loan within the same year because of the appreciation that happened within that year. Now, they wouldn't have been able to do that had they not originally purchased that home and used an FHA loan. If they didn't use FHA, they weren't going to be able to purchase at all. So if you're in a position and FHA is your only option, I'm not telling you not to consider it. I'm just saying you need to have a longer term time horizon. Now, as a real estate agent, one of the things I hear all the time is that because I'm a real estate agent, I'm always going to say it's a great time to buy a house. Right now, it's not a great time to buy a house. It's a great time to buy a house if you have a longer term time horizon, if you plan on being in there for an extended period of time, but it's not a great time to buy a house if you're only looking at it for the short term, 2 to 3 years, you're thinking of house hacking it, you're thinking of doing these short term options and not owning the property long term. If that's the case, then you really need to consider what you're doing. Now, if you're watching this and you're still considering an FHA loan, you want to know the FHA loan requirements, do me a favor, check out this video here. I filmed it. I talk about each requirement in detail so that you can understand exactly what you need in order to qualify for an FHA loan. Now, another reason people often use FHA loans is because it allows lower credit scores and it allows you to finance more property going up to a higher debt to income ratio, which basically means they allow you to use more of your income towards the mortgage than any other program out there. Now, the risk involved there is that you're likely extending yourself more using an FHA loan than you would be using a conventional loan, because conventional caps you around 45% or so on your debt to income ratio, whereas FHA allows you to go as high as a 57 debt to income ratio. So if you're at a 57 debt to income ratio and getting approved for a mortgage, then that means you likely have less expendable income than those using conventional loans, which puts you at a higher risk if something happens with your employment, you get laid off, or that you're over leveraged in some way. That is a risky situation because your mortgage payment is not going to change. Now, while FHA does allow you to go to that higher debt to income ratio, and that's a benefit because you can qualify for more property, you need to have reserves in the bank. You need to have a rainy day fund. You need to have money outside of your down payment just in case something happens. Now, FHA oftentimes allows you to buy with just the minimal down payment, that 3.5% that I mentioned earlier, and not really have to have any additional reserves, which puts you, again, at risk if you're buying that property and something happens. Say you bought the home and something in the home needs to be replaced, and then you've got medical expenses, and you're just put yourself in an over-leveraged situation. It's important to have reserves. It's important to have that rainy day fund that I mentioned earlier. Basically, what I'm saying here is I don't want you to put yourself in a position where you're house poor, if you will, where every single dollar that you have every month is going to your mortgage payment, and if something happens, that you're setting yourself up for failure, right? I want you to understand the risk associated with this, but also make good informed decisions that it can be a stepping stone for you to get into home ownership, which can lead to long-term generational wealth. Now, if you're watching this video and you want to see if you can get approved for an FHA loan, you don't have a lender, you need a referral, I've put a link in the description below that you can check out. It's in the description. Refer you to an expert that I know that can guide you through that process and see if they can get you approved for an FHA loan. Now, if you've seen some of my other videos in the past, I've talked about how sellers look at FHA loans as a negative loan, and it makes it difficult in some cases to buy a home. But that's recently changed. In fact, FHA loans have gotten way better in this market. Sellers are now considering them. And if you want to know what I'm talking about in detail, do me a favor, check out this video here.